The first scalping strategy takes less than 30 seconds to spot on the chart, but most traders completely ignore it. You open your 15-minute chart, you spot a single candle, and you draw its high and low. This creates a range. Now you simply wait and watch what happens next. If the next candle breaks the range and then closes back inside it, that's a liquidity sweep, and that becomes your signal. Now switch to the 1-minute chart. You'll notice the same thing. The high and low of that 15-minute candle now form a range on the lower time frame. Price breaks below the range and then closes back inside it, forming a liquidity sweep. That's your entry. You enter at the close of the candle that moves back inside the range. Your stop loss goes below the range, and your target is the next key level. Look at what happened. The market moved straight to the target. Now let's look at another real chart example. Again, start with a single candle. Draw its high and low to form the range. The next candle breaks above the range, but then closes back inside it. Now switch to the 1-minute chart. Observe what happens. Price breaks the range, then closes back inside it, creating another liquidity sweep. You enter at the close of the candle that moves back inside the range. Your stop loss goes above the candle, and your target is the next high. Look at the result. The market reaches the target as expected. This strategy is not a holy grail. Always use proper risk management and trade it in the direction of the trend as explained in my previous videos on the channel. Now let's move on to the next strategy. Look at this chart. You've identified a clear support level where price has bounced twice. It's a key level that catches everyone's attention. Now look at what happens next. Price approaches that level again. You expect another bounce, so you place your trade. But instead of bouncing, the market drops just enough to hit your stop loss, and then immediately reverses. Annoying? Yes. But here's the reality. Institutions do this on purpose. They hunt stop loss orders, collect liquidity, and then push the market in the direction they really want. Now let me show you, in 30 seconds, how to trade the stop loss hunt strategy. You identify a key support level. Price hits the level and reverses. It pulls back, comes back again, and reverses again, so the level is clearly respected. Now price approaches the level one more time. A rejection candle appears at the level. At this point, you do nothing. You simply wait and observe what institutions are doing. Look at what happens next. Price suddenly breaks below the level and then closes back above it. That's a clear stop loss hunt. Now you enter at the close of the candle that hunted the stop losses. Your stop loss goes below the candle, and your target is the next key level. Look at the result. The market moves up exactly as expected. Now let's look at a bearish example. Price hits this level and reverses. It hits it again and reverses again. That forms a clear resistance level. Now price approaches the level once